Welcome back to AlgoBot, the channel where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host here at AlgoBot, and today we're studying an expert advisor called range rotation fade. This is a pure price action, mean reversion approach. It maps out a balance range from recent highs and lows, watches for the market to probe a boundary, and then get rejected on a long wick, and fades that move back toward the middle of the range. By the end of this video, you'll understand the logic, the code, and a candle-by-candle example. Remember, this is educational content only. So what exactly does range rotation fade do? At its heart, this expert advisor is built for ranging balanced markets, the kind of sideways conditions where price rotates between a ceiling and a floor rather than trending strongly in one direction. It works on a single time frame, the one you attach it to, and it can be applied to instruments like major foreign exchange pairs, indices, or metals, wherever balanced rotation tends to appear. The strategy leans on two classic building blocks. The first is support and resistance. Over a set number of recently closed bars, 20 by default, controlled by the RangeLookback parameter, the EA records the highest high and the lowest low. Those two levels become the upper and lower boundaries of a balance zone, and the midpoint sits exactly between them. The second building block is candlestick rejection, often called a pin bar. The EA studies the anatomy of each completed candle, its body, its upper wick, and its lower wick, to judge whether a boundary was tested and then defended. To make sure it only acts in genuine rotation, the strategy adds a balance filter built on the average true range, or ATR. If the width of the range is wider than a chosen multiple of ATR, 6 times by default, the market is probably trending, and the EA stands aside rather than fading a strong move. Who might find a strategy like this interesting from a learning perspective? Traders who are curious about mean reversion, about reading raw price action, and about how support and resistance can be defined mechanically rather than by eye. It's a methodical, rules-based approach that takes one trade at a time. As always, this is shared for education only. Trading carries real risk. Losses are a normal part of the process, and nothing here is financial advice or a recommendation to trade. Let's walk through the mechanics step by step. The EA does its thinking once per completed bar, so it isn't reacting to every tick. It waits for a candle to close before making any decision. When a new bar opens, the previous candle is treated as the signal candle, and the analysis begins. First, the EA builds the balance range. It looks back across the bars before the signal candle, takes the highest high as the upper boundary and the lowest low as the lower boundary, and measures the distance between them as the range width. Then it checks the balance filter. It calculates the average true range over 14 periods by default and confirms that the range width is no greater than the MaxRangeAtrMult multiple value times that ATR. If the range is too wide, the market is considered to be trending, and the EA simply waits. Next comes the rejection test. For a short setup, the signal candle must sweep above the upper boundary, its high pokes above the ceiling, but then close back below it. On top of that, its upper wick must be at least the WickRatio multiple of its body, 1.5 times by default. That long wick shows the push higher was rejected and the level was defended. When all of that lines up, the EA signals a sell, fading the failed move back toward the middle of the range. A long setup is the mirror image. The signal candle dips below the lower boundary, then closes back above it, and its lower wick must be at least the WickRatio multiple of the body. That signals a buy, fading the failed break lower. Now the exits. The stop loss is placed just beyond the swept extreme, padded by the SL-ATR multiple value times ATR. For a sell, that's above the candle's high. For a buy, below the candle's low. The take profit is set as a fraction of the range width traveled from entry toward the opposite side. With the TP range fraction at 1/2, the target sits roughly around the midpoint of the range. The EA also keeps things simple by holding only one position at a time per magic number, so it never stacks trades on the same idea. Let's look at the actual MetaQuotes language code, just as you'd see it in MetaEditor. At the top are the input parameters you can adjust. RangeLookback, set to 20, controls how many closed bars define the balance range. ATR period, 14, drives both the balance filter and the stop padding. MaxRangeAtrMult multiple, 6, sets how wide the range may be and still count as balance. Wick ratio, 1.5, sets how long the rejection wick must be compared with the body. SL-ATR multiple and TP range fraction shape the stop and target, and lots and magic handle volume and trade identity. Below that are the two signal blocks. The sell block first checks upper sweep. The signal high reached or exceeded the upper boundary, while the close came back below it, and upper rejected, meaning the upper wick was at least the wick ratio times the body. When both are true, entry is taken at the bid. The stop is the signal high plus the SL-ATR multiple times ATR, and the take profit is the entry minus the TP range fraction of the range width. After a safety check that the stop sits above entry and the target below it, trade.sell sends the order. The buy block mirrors this exactly. Lower sweep and lower rejected confirm a defended floor. Entry is taken at the ask. The stop is the signal low minus the ATR padding, and the take profit is the entry plus a fraction of the range width above. Once the stop and target are validated, trade.buy places the position. Two clean, symmetrical conditions, one for each side of the range. Now let's bring it all to life on the chart. Across the screen, you can see our balance range drawn with 3 dashed lines. The resistance boundary up at 1.0900, the support boundary down at 1.0840, and the range midpoint sitting between them at 1.0870. These boundaries come from the highest high and the lowest low of the recent lookback window, and the space between them is the rotation zone the strategy wants to trade. Watch the first handful of candles. Price drifts back and forth inside the range, brushing up near resistance and then easing back down toward support, but every candle closes inside the boundaries. There's no sweep and no rejection yet, so the EA stays patient and simply keeps measuring. Notice too that the range is reasonably tight relative to volatility, so the balance filter is satisfied. This looks like rotation, not a runaway trend. Then comes our long setup. Price slides down and presses into the support boundary. The next candle pushes a little lower, dipping its low beneath 1.0840. That's the market reaching below the floor. But by the close, buyers have stepped in and dragged price back above the support line, leaving a long lower wick beneath the body. That wick is the rejection the strategy is looking for, and it is well over the required ratio compared with the small body. The floor has been defended. As the following candle opens, the buy entry marker appears. The EA fades the failed break lower, expecting price to rotate back toward the middle of the range. Its protective stop sits just below the swept low, padded by ATR, so if price truly breaks down instead of rotating, the loss is contained. From there, price begins to climb. Candle by candle, it works higher, away from support and back into the body of the range, until it reaches the take-profit target partway across the range, around the midpoint area. The long trade is complete, having captured that rotation from the floor back toward balance. Now the market hands us the opposite setup. Price keeps pressing upward, this time toward the resistance boundary. A candle spikes above 1.0900, poking its high through the ceiling, as if a breakout is underway. But again, the close tells the real story. Price settles back below resistance, leaving a long upper wick stretched above the body. That rejection says the push through the ceiling was not accepted, and the level has been defended from above. On the next candle, the sell entry marker prints. The EA fades the failed break higher, looking for price to rotate back down toward the midpoint. The stop is tucked just above the swept high with its ATR padding, keeping the risk defined if price instead continues upward. Then the move plays out within the range. Each candle steps lower, retreating from resistance, until price reaches the short take-profit target, again partway across the range near the middle. The short trade is complete. So in one clean picture, you've seen both halves of range rotation fade. A buy that fades a defended floor and a sell that fades a defended ceiling, each entering on a rejection wick, each protected by a stop beyond the swept extreme, and each aiming for a measured slice of the range. This is an illustration of the logic for education only. Real markets are noisier, sweeps can fail, and not every setup rotates back as cleanly as this. That brings us to the end of our look at range rotation fade. We covered the idea of mapping a balance range from recent highs and lows, the ATR balance filter that keeps the strategy out of strong trends, the rejection wick entries that fade defended boundaries, and the stop and target logic that defines each trade. Hopefully you now have a clearer picture of how this mean reversion approach is put together. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment telling us which strategy you'd like us to examine next. You can find more educational resources over at www.algobot.live. Everything here is for educational purposes only and is not financial advice. Past performance does not guarantee future results. Trade responsibly.